Andrea Costello has been running her own shop for more than 2 years. She custom makes clothes for children and adults and usually expects much higher sales around Christmas.
In terms of the Christmas lift, in terms of people buying, they're not buying as early anymore. Everybody's waiting last minute.
Shoppers stocked up on Black Friday deals in November, pushing sales up 1.6% compared to last year. But these early deals meant people splurged in November and are spending less in December.
There's a lot of retailers now that are going into sale before the Christmas already. So coming up to January sale, there's no more of the whole big thing about January sale because they've already sailed before Christmas.
Costello isn't the only retailer to worry. Gandy's has 3 shops in London, and it's had to keep the discounts going to encourage cautious spenders.
It's a little bit slower. I think people are interested in looking for what they want first and not impulse buying. They're waiting to see what's around, getting the best value for their money.
The lower pound has helped push inflation to a 5-year high. Prices are going up on everything from food to luxury goods.
I find it expensive because of interest rates going up as well. So it's a squeeze everywhere with shopping, interest rates, electricity, gas, everything.
Everything's much more expensive, I think, this time rather than it was last year.
Are you worried for the Christmas season then?
Not really, no. We managed to get a turkey in the sale.
Consumer spending fell by almost 1% in November. That's the 3rd month in a row, according to a study by Visa. The credit card company predicts UK spending is on track for its worst annual performance in 5 years. That means retailers are battling the combination of decreased sales revenue and increased operating costs.
The backdrop for retailers' costs is very difficult. So on the one hand, they've got rising sourcing costs from the Brexit-related collapse in sterling that happened around 18 months ago. This is still feeding through supply chains, so their sourcing costs are under pressure.
Costello, though, is optimistic.
As a retailer, it means that I need to get my act together online. The online store is busy, relatively busy, and also have this presence here.
With shoppers cautious about spending, this year may be less of a time for giving and more of a time for saving. Kristina Partsinevelos, TRT World, London.
So that's the situation in the UK, but let's get a broader view now. And joining me from London is Mike Ingram. He's Chief Market Strategist at brokerage firm WH Ireland. And in New York, I'm joined by luxury brands expert Bonnie Pressman. She's also a founder of online luxury lingerie shopping site We Hours. Bonnie, I'm going to start with you, if I may. We just heard in that report about the squeeze that consumers in the UK are facing, but luxury online retailing, especially in the US, appears to be doing rather well. What's driving that?
Well, I think there's consumer confidence that's making it in a positive. The retailers have worked harder to personalize their online. They're talking to their customers more. Where it's convenient, there's same-day delivery, or there's in-store pickup. So right now, the focus really is on customer service and making sure that you're doing your very best to keep them engaged and keep them coming back.
Bonnie, I want to focus for a while on your particular business, the online sales of luxury lingerie. How's business been for you this year?
It's been quite good. Our model is different than most. We don't hold inventory, so we essentially have agreements with our brands to do drop ship. We, of course, pay for the shipping, and we split the difference on the sale. But lingerie, it's become quite a destination classification, part of that segment now.
Very quickly, does most of your demand come mostly from domestically from the US, or is it from overseas, perhaps from China, for example?
No, it's really domestic. And it's surprising that a lot of our customers are male. buying for their wives or girlfriends. So,
right.
But yeah, it's pretty much domestic.
Okay, Mike, I'm going to bring you in here. What is, I mean, you've been listening to what Bonnie's been saying there. Are some of the things that she's been saying borne out by your own research?
Yeah, absolutely. I think the US consumer is in a much better place than their UK counterpart, as you mentioned in the preamble interview. You know, the real income squeeze is on in the UK. The inflation's now at 3.1% on the consumer price index. Real wages are growing at just 2.5%, and this has been going on for several months now. You know, we're expecting that inflationary impulse, which was ultimately generated by that sterling devaluation 18 months ago, to fade into 2018. But you know, there aren't that many signs that wages are actually going to pick up at all. So you know, you've got to be quite granular about it. And there's no doubt that you know, some of the people who are necessarily natural buyers of luxury goods are enjoying higher wage increases, and they're relatively insensitive anyway to the sort of movements that we've seen in the underlying UK economy. But it's maybe the aspirational sort of segments, the mass affluent segments are perhaps starting to feel the pinch, and that's been reflected in the numbers. Conversely, of course, the sterling devaluation has been great for foreign visitors, for tourism, and some of the flagship destination retailers such as Harrods have had an absolutely great year on the back of a higher tourist footfall.
Let's turn this around for a little bit, Mike, looking at it from an investor's point of view. If you want to invest in the retail story, especially possibly the luxury retail story, where do you see the risks and where do you see the opportunities?
Well, I think, certainly the longer-term opportunities lie in the emerging markets, and one of the things that has certainly helped the emerging market story more broadly, not just in luxury, has been the fact that growth has accelerated and broadened out during the course of the year. Again, the consumer's in a reasonably happy place in most of these countries, particularly Southeast Asia, having got over a sort of a near heart attack generated by China a couple of years ago. We've got, as I said, we've got a weak dollar environment as well, which is very helpful for the consumer in emerging markets for all sorts of reasons. Just to flip, again, for me to flip that on its head, one of the risks perhaps is that we end up with a strong dollar next year. That's not the consensus at the moment, but we're expecting further dollar weakness, but I would caution investors that the consensus at the start of this year is that we would have the dollar would strengthen through the course of 2017. In fact, the dollar index is down about 9% over the course of the year, and now everybody's saying, well, that trend's going to continue. If it reverses, then you might see a few issues in how that propagates through emerging markets, which are some of the fastest growing luxury goods markets in the world.
Right. Mike Ingram, WH Ireland in London, thank you very much indeed. And Bonnie Pressman in New York, thank you as well.